notes while I take totes of the marijuana smoke. Though you wanna choke, relax and take notes while I take totes of the marijuana smoke. Though you wanna choke, relax and take notes while I take totes of the marijuana smoke. Totes of the marijuana smoke.
Yo, yo, is this working? Can you guys hear me? Hello, hello, hello. The clock hath chimed 6:30 p.m. So here we are. Paul, hello, Paul. How's it going? I'll just let a few more people drop in. Just give it a couple of minutes. Just wanted to do a technology test before we did that. And you guys can see the chart, yeah? Should be all gravy. Linky's here. Hello. You managed to catch it this week? Just got home from the gym. What did you work out? All right, a couple of minutes and then we'll get into it. You see, we've got 10 or 12 people here. Who's here? Say hello. Let me know who's here. Whole body. Fair enough. I do a kettlebell. I've got a kettlebell behind. I don't know if you can see. And the days I can't get down to the gym, I do like a whole body workout with that. It's pretty intense. And there's no windows in here and it gets really hot. So it's a nice little workout, to be fair. I'm sweating like crazy. But kettlebells are underrated. Okay, right. Let's get into it now. So in this video, if you guys are here every week, that's great. You kind of know the drill. But for those that are here first time, basically, we're going to run through Bitcoin. We're going to run through Ethereum. We're going to run through Solana. And I talked about this in my video this morning and what I expected for the week ahead. And yeah, this live stream is a bit more of an update, price action update from basically the Monday morning and Monday afternoon price action, so we can have a bit more of an idea of what to expect over the week ahead. But it's very difficult first thing on Monday morning to put a prediction out. But Monday evenings are usually a little bit better because we can see what has developed early on in the week. And then the video is sponsored by Watt Exchange, and that's who I'm charting on. They are non-KYC perp decks. And if you join over with Watt Exchange on my ref link, I'll get paid for the volume that you create for Watt, but I'm going to give you half those commissions straight into your trading account. And you can do with that whatever you want. You can withdraw it, you can trade it, you can stack it. And that's forever, basically. It's not a gimmick. It's just like forever, as long as you're trading on Watt, essentially. And then there's a big airdrop early next year in the style of hyperliquid as well. So it could be a big earner. So you can just farm points by trading with them, basically. And that's live now. So that's who I'm charting on. And let's get into it, shall we? So I'm on the daily chart at the moment. I'm going to run through things again, just like a kind of a map of what we're looking at. I know I did this morning in the video, but I don't. Like, if I get one view on my video, that's amazing to me, genuinely. So if you have seen it, apologies, but I'm just going to run it really quickly. So we have the previous all-time high, gets broken with this big surge here, and then we have a range, and it's a bit of a distribution range, a wick-off distribution range, where it does this, and then it kind of drops down, but pushes back into the range, and then pushes higher. And that's what you see in bull trends. A lot of people, when they see these wick-off distribution tops, they're like, okay, it's time to sell. This is a top. But this happens when the trend is really strong. So I'm kind of banking on this happening, and I'm waiting for this to happen before I get into a move. I did jump into a small long on Bitcoin earlier, which I'll talk about in a sec. But that's kind of what I'm expecting overall. And, you know, you can see the range has formed sort of like that. So it's distributed down. But if it comes up and then puts in a lower high and then drops down, that's not great. That would probably be a sign that we're at a top. But we'll jump down to the other time frame, so we get more candles essentially. So this level is really nice. I really like this one. It's a continuation pattern. It's a continuation pattern I've been trading for years, and it's essentially a very typical bull flag, if you like, and we'll see it on H1. It's got more candles, but I like to trade areas like this when they're around other key areas, and this is a key area. This is a key high. Obviously, it was the all-time high before the new one, and we have this cluster sitting on it. So I am just going to mark that, and I'm going to mark the whole level because it's easier to see it like this. And we can see that prices dropped down and bounced perfectly from the top of it. Now, if we are really bullish, if we are still in a bull market and this thing is going high, it shouldn't come down and take out this low. I'm not saying if it does, it's bearish, but I shouldn't expect it to come down here. If it does and it wicks through it, I will still look for some sort of reversal pattern up, but I'm not bearish until this level gets broken, basically. And if it does get broken, the next low I'd be looking at is this one here. And this is the level which is holding up all of this price action. It's where the buying took place to come and push up above this previous all-time high. Basically, we have these lows here that get broken, and in the same way that we have this broken up here. So when I talked about that trend up, bit of a wick off distribution pattern, and I'm no expert on them, like this, and then push up and continue. You can see the similarities in this overall structure and this overall structure, where price at the moment potentially is somewhere like that. Maybe that's kind of what I'm looking out for, basically, and that's how I'm going to trade it when I get confirmation of that move. But this level here, price drops down, and in the same way where I've just said, if Bitcoin comes back up into this range, puts in a lower high, and then drops down, that's bearish. In the same way, when price is down at this point, if it pushes up and then puts in a lower high and then a lower low, it's bearish, but it doesn't. It pushes up and then makes a higher high above this recent sell-off. I'll zoom in on that in a sec. So down here, this sell-off, this is where price tries to push up, and then all this selling comes in and takes out this support, and therefore that's a key level for me. And in the same way I said this is a key area, key continuation level, and it's sitting at another key level, this is exactly the same. It's another continuation pattern sitting at a key level, and you can see what happens when price revisits it, and it just rips to the upside. So I'm hoping that it does something similar at this level. The only thing is that, we have been ranging for like 3 weeks maybe, and then it's broken down, and it may well just range still. But on the hourly, we'll see the confirmation for me that this is going to go higher. So essentially, I'm looking for something similar to this to happen next over the course of the week, maybe. But yeah, let's jump down to the hourly. We'll get a clearer picture. And this is the range low here on the hourly time frame, and you can see this level kind of respects it. But just to be really pedantic, this was a key low, and it respected this level. And you expected also this to push up, but I definitely did anyway, and it hasn't. But again, on the break of this level is a supply zone, and for those that don't trade supply and demand, it's a really simple concept. This is a demand zone where price is in an uptrend and it ranges and then it pushes up. That's demand. And then the inverse is if we come on a downtrend and then we have that and it breaks the downside. That's all it is. Of course, there's a little bit more to it as well, where if you come up, it could go sideways like so and then break down. That's still a supply zone. That's also what people will call a wick-off distribution. So this is a supply zone here, and it's the last one before the test of this support. So it is a key area, and again, it's also sitting at this low. So what I want to see basically is this level get broken and get flipped. It'd be nice if it just ripped up like that, right? But breaks it, flips it, and then and then puts in some lows, some higher lows and things like that, some support areas above it, and then breaks to the upside. And then on a retest of it, you can look to go long as a continuation. So if that's my ideal scenario, that's also going to confirm to me that this is a bottom. But what we also have here is another kind of mini supply zones. The price comes down, bases, and then drops, gets taken out. And I'm going to jump down to M30 because it's going to be a bit cleaner. And the bottom of that is a demand zone. This is what I want. So that's my kind of line in the sand there, or also it's got a little bit of a level it could fake out to. I don't really want to see it come down below there because then it's definitely going to come and test these lows. But this is, again, if you're reading the story of price action and you want confirmation that, yeah, this is going to start trending up, we have a series of higher highs. So at this point here, I'm going to change the color. Let's make it yellow. You see that? Yeah, easy. Okay, so we have this high here. Price is on a downtrend and then starts basing sideways. And then instead of continuing the downtrend, it puts in a high above here and then continues. That's your first sign that we potentially have a trend reversal. And then sitting at that, we have this cluster where instead of dropping down, it finds support and pushes up. And this is where the buying originated from to come and break this next high. So we have, technically, we have a higher high at this level. We have a higher high at this level. And then now the next higher high, which I'm interested in, would be here. I mean, it is creating higher highs and then higher lows. You see, we have them here. We have a higher low here. It is creating a sort of channel, but using supply and demand as well, not just the diagonals. This is a key area of selling that needs to be broken. If you're bearish, you want to see this level, when it gets tested, you want to see it hold up. And then, you know, if it starts breaking these higher lows, you're going to think, right, it's not looking that great. But it's had a really nice reaction from the lows. People were getting kind of panicky over the weekend, weren't they? We had the month end as well. So for me, these are the kind of two levels I'm most interested in, at around about 113K. If it comes down there and then starts putting in more reversal signs, that's a long that I'm happy to take. If at the reversal sign it fails in one big fail swoop, then I'm taking a short. Well, actually, I wouldn't take a short because of this big demand, but that is technically a short pattern. The risk reward isn't there for me, but if it did that higher up potentially. So yeah, that's where I'm looking at Bitcoin. I think, again, if I just jump to H4 and just talk about the rest of the week, we want to see, if you're bullish like me, you want to see this supply zone first of all get flipped. And although this level you would kind of look at as first trouble area, it's not amazing because it's just a reaction to this level. So this is the kind of end of that chain, and then there's a lot of space up to the next level, which, I mean, if we drew on the chart the chain here, so this, as you can see, is the sell-off which came down and pushed and broke this low. So that's key, but you can see it, if you just literally go to the left, you can see that it's reacted from here, which has reacted from here, which if we just go to the left has reacted from here, which if we go to the left has reacted from here, which if we go to the left has reacted from here. It's faked that high and it hasn't closed above that level. So the end of the chain really is somewhere up here, like that. Let me just get rid of all this yellow shit. So even though this is a nice level, like I said, it's a reaction to all of this. And to me, when that happens, if it starts ripping up in the same way that Ethereum did before it broke into like the, we'll talk about that in a sec, before it broke into the 3000s, it had a lot of clear space to run up to 2800. That'll make more sense when we look at Ethereum in a minute. But this is all kind of empty space to me, and then this is the real test. So I think it should be good if it breaks this level to push up to back up to 121k. But you would be quite mindful of this because it is a key level, because it is where the selling took place to drop down. But yeah, you know, the sooner the better. And normally normally when Bitcoin moves, it starts moving and everyone kind of misses the bottom and then they start the continuations higher. It's a little bit different these days because it takes so much more money for Bitcoin to move compared to before. Obviously, there's way more institutional interest and market cap's really high. The amount of money going in and out of it each day is crazy compared to where we were trading like 5 years ago. Ethereum moves a little bit quicker, so we'll talk about that in a sec as well. But yeah, that's my level. Basically, I want to see it flip that. If it doesn't on M30, I mean, it's looking quite nice, to be fair. We have a range here as well that has formed. And in this range, it's got a nice continuation. Push up to a high, high low, tries to break it, puts in more lows, and then rips up above the range, and now has put in a high compared to this. So this really should be pushing up if it's bullish. If I see this pattern intraday on GBP USD, which is my bread and butter, I'd be taking this all day. And I did take this. I actually took a long on the break of that earlier, only a small one, because I'm not totally convinced yet. But once I'm convinced, then I'll be looking for continuations above here, as I said, something a little bit like that. Okay, same kind of range breakout essentially, and that's how you play moves. That's how you play trends. So yeah, that's Bitcoin. I hope that's made sense. Let me jump onto Ethereum, and then let's start from the daily as well. So this is kind of doing what I thought, or what I said I wanted to see on Bitcoin with the Wyckoff distribution. So again, let's just talk about some of these key levels. We have this high. We have this one here as well. Yeah, this gets broken. This is the origin of the buying that took place. So you have this really big range here, right? Big demand zone, like I was just saying, ranges and then breaks to the upside, puts in a higher low, and then from this low, the buying took place to create a high to break all of these levels, and then eventually came up here. On a retest of this level, you would genuinely expect a bounce, and you would look to go for longs at that level, and it did. It comes down, and remember on the daily, so it's a little bit different. Comes down, bounces from it, goes sideways, pushes up, but then on a retest of these level, multiple times it gets broken. So this sell-off here, after this bounce, this sell-off, instead of continuing to the upside like that, it creates overall this supply zone. And then remember I said supply zone, sideways, and then a drop. So it creates a supply zone, and I've just marked the extreme of it. And it's a bit of a reaction to this level here. So as we can see, it then rips up, higher low, higher high, and now a lower low. But it's pushing up pretty strongly today. And I would imagine that looks like a bottom. This is what I'd kind of expected to see on Bitcoin. But like I said, it takes ages. It takes a lot of money to move it. Dropping down to H4, this is that previous high I was talking about. And I think we talked about it last week, but I'm pretty sure, yeah, we did. Where this was the end of the chain, and I can't remember where Ethereum was at that point, but I said the biggest, if it comes down to 3,300, that's a really nice long. It's the end of the chain. So again, like if you mark this support, you mark this support. I'll do it with a so that's the support level, that's a support level, that's a support level. But if you just go to the left every time, you can see this is the end of the chain. This is where if it flipped that level, the market structure changes, and then I was getting bearish. But this is exactly what you want to see if you think the bull market is continuing. And then we have that last high before the test of that low. It didn't go right down to the extreme, but it's bounced pretty much off of where, you know, at these levels, call them MPL, max pain level, which is essentially the end of the chain and the lowest part it can get to. Like I said before, the market structure breaks. And this is where everyone kind of shits their pants and starts getting bearish and thinks it's all over, and you see all the memes and everything on X. But it didn't, and if you were able to catch this, that's a killer trade. On the hourly, it's similar kind of price action to Bitcoin, where this high gets put in and acts as first trouble area, and price bounces. And again, remember I said this before, at this point, if you're bearish, you want to see it keep going, but it doesn't. It flips the resistance, puts in the first higher high here. I can't write that very well, but puts first higher high in, and then comes and breaks that supply zone and puts in a clean range. And this will probably look cleaner on M30, but if you follow my videos, there's a price action video for beginners on my channel explaining how I talk about how I mark these ranges. Essentially, you wait for a trend, you wait for the retrace, like a low, and then you wait for the high, the retrace high, to be tested again. And then I mark my range like that. And then I want to see how that range interacts, if it puts in some higher lows, some higher highs. And that's essentially what it's done here. And then it's cleanly ripped out of it. So it's broken that level. This is what I want to see on Bitcoin. Now, if you missed it, like I have, what you want to do is wait for it to come back down. You can either take it at a limit order, which I don't like doing because it could just like that. But if it comes down and then puts in a reversal pattern, that's a clean area for me to then look for longs, and then I'd be aiming higher. But this has been a really strong move, and it makes me think the rest of the coins are going to be doing this at some point soon. Where's it going to go? I think, you know, it's going to push back up. Here is the support. So again, I've just marked this because even though you could say all of these lows are support, like that, you know, how do you know which one's the important one? Well, always look to the last one, and then there's a gap below it, and this one is holding all of this up. These are all just reactions to levels on the left. So let me just get rid of them. And then this is basically where the buying took place to make a new high. So that's a clean level. And then looking at this level here, what's sitting on it, and again, we'll look at M30 in a second, it'll probably be a bit cleaner. We have a supply zone, and its price is reacting from it at the moment. Worst case scenario, if you're bearish, I think that's the deepest retrace level here. This is where the sell-off took place to come and break these lows. Is where the decision was made. So, yeah, like this is the first hurdle it now needs to get over. But if it comes up above here and tests this, like this is where, if you're bearish, that's your like, okay, that's a top. If it reacts like that and comes back down, that's a top. You want to short that. But I just think the way that the market's looking, where we are in the cycle, it's going to rip through it. So I'd look for like a continuation where it comes sideways, maybe comes here and can't come down, and then finds support at the whatever level gets put in here and then continues. That's my ideal scenario here. But again, it could drop back down. It could drop back down into this range and then provide another opportunity. But again, you can see if you follow this chain, this is a reaction to this little level. So again, this is the test of the level, and then this is the sell-off that happens from it. From a supply and demand perspective, you would say that the orders from this level are mostly absorbed. So even though it's reacting off it, I wouldn't expect it to come back down here in the same strength as this. But we have a level here, nice continuation level. It could find some support at this point and then continue up as well. So if you're not in a position, I would just look to some of these levels where it goes sideways. Look at what is broken on the left. If it's not broken anything important, kind of skip it. And my advice is always to wait for the deepest it can go to, and that would be down here at about 3,500, what's that, 3,574-ish. But again, like this is all a reaction to down here, so it could break it. But considering the strength of the trend, I think it would bounce from there. So yeah, that's Ethereum. I can't remember what I was saying earlier in my video this morning, but I did say, I do remember actually. I wanted it, if I wanted to long, I wanted it to come further south. But Linky, I know you're here. I know you trade like this, or looking at trading like this. Here's one of those continuation patterns which I'm always preaching. So you have the retrace point, you have the low, and then you have a higher high, higher low, higher high, higher low, and then on that higher high you could go long, or on this higher high you could go long. But look how clean that pattern is on M15, and it's just below, it's kind of like at that retrace high. So at these at areas of significance, if you see these patterns, whether that's from a retrace or it's on a continuation, they're really good areas to trade, really good patterns. So that's what I'd kind of be looking for now on ETH. So this is technically a range as well. And then it could come down and do the same thing like down here, and then you could watch it potentially rip. But yeah, that's a clean level as well actually on M15 if you're trading M15. For me, it's a bit late. I'm not going to catch that tonight. But those are a couple of nice levels. And essentially when price is ranging and you're not in a move, instead of FOMOing, always know that it's going to put some sideways price action in. And if it does, and then it breaks out above it, you can go in relatively tight with a stop below the range and then entry once that is confirmed. Or like I said, you know, it could push up, put in maybe nothing, come back, push up, and then it comes back down and then puts that reversal in at these sideways levels, which are essentially supply and demand zones. So yeah, that's Ethereum. Let's look at Solana, and then I will look at the chat and see if you guys have got any questions or if you want me to look at any charts. Solana. keep doing that. Okay, so daily, again, very similar to what Ethereum is looking like. I wasn't too sure what it was going to do. I'm still leaning bullish on everything, to be honest, but I didn't like the way the price action looked on Solana earlier. So let's just mark this. This is the most obvious one for me. And then sitting at this retrace point or this high is this cluster here. And this is a decision point. If you watch my price action strategy for intermediates, I talk about this. I talk about decision points, and they're really clean levels to trade from. But again, like if price is ripping up here, remember this is the daily, but it applies to all time frames. If price is ripping and you've got that FOMO, you've got like, you really want to get into the move. You can see here, it always retraces. You'll always get a retrace. And these deep levels are really clean. The decisions are made to flip the market structure, because at this point, you know, you've got all of this local support gets broken, and it all starts from this sell-off. So what you would expect is price to come down and then push up back to the support, back to the supply or the resistance, and then drop down. But it doesn't. It drops, comes up sideways, and then breaks the market structure. So this is that first level in this chain where you would say it's a key level. This is reacting from the left here, and then this would be like the deepest it can go down here. So I'm not entirely convinced by this level just yet because of that reason, because it's all just a chain and this is the bottom. In the same way that this isn't the key level, this is all a chain, and we've talked about this in other videos. If you look at the lows and you go left, it's a reaction to that. I'm drawing that too big, which is a reaction to this cluster here, and you've got the clean move up there. So in that sense, this is the end of the chain here, and you can see it bounces on it. And at this point, obviously, everyone's going like, oh yeah, Solana's all-time high soon and blah, blah, blah. And then it ends up retracing to the deepest point. So although this is a nice level, and we'll look on the lower time frames in a moment, it's a reaction to this, which is a reaction to this. So it could still come down to like 140, not really sure. But if it does, if it comes down to that level, that's where you look for your reversal pattern and then potentially high. But it could just do it from here. Right, so let's go on to H4, and it's got a similar kind of thing to Ethereum and Bitcoin, of course, all kind of correlated, isn't it? So you can see this is the level which is holding all of this up, and you can see this is where it bounced price from. And like Ethereum and like Bitcoin, it has that first trouble area like that, which is now, been flipped. So again, what I want to see is this level kind of flipped, maybe a bit of sideways, and then a breakout to the upside so I can get bullish on this again. But if we drop down to the hourly, this is what I wasn't too sure about this morning in my video, if you watched that. But it was, I'm just going to bring that down, just look a little bit cleaner. It's got a lot of, like, this is the end of that chain here. And then if I draw a range, it might be a bit easier. Let's just draw this like this. Range. Like that. So there's your range, but you can see instead of going sideways, it just stays on the top of it, flips the top of it, and then goes bullish. So down here, if it does retrace, is your kind of last line in the sand type of longs, max pain. Everyone's starting to cry to their mamas down here. But I think it looks quite good. It's pushing up with quite a lot of strength. So on, again, this high, this is that first trouble area. On this high, we have a cluster, which will be on M15, a range. It will be on the lower time frames like this, a bit more like that. And then we have this big low here. And then on the break of that low, we have this continuation level. This is the extreme of it. I always mark the extremes of it, even though the entire level is like that. It's just not really much. There's too much information at that point. So I've got the extreme of it, that max pain level, because I believe when you're in an uptrend like this, it's going to gravitate towards the absolute extremes. But above that level here is, for me, confirmation. That's 172. Above that level for me is like game on, then I think higher. If you're not in the move now, we have this cluster, like I said. So if we drop down to M15, maybe M5, just to see a bit more candles. Yeah. Here's that range again that I talk about. Like so. You have price pushes up, confirms the range, drops into it, high in the context of the retrace point of the range. It's not a high above this though, obviously. Drops down, puts in equal lows or a higher low down here, and then puts in another high. This could be your long there with a stop below it. And if it comes back down, you would expect maybe for it to, again, reverse and come up to this 172 level. That's a nice intraday trade on M5 if you're not caught one. But you can see the strength of these levels, and we'll see what it looks like tomorrow. Maybe I'll post an update on what happens. But that level here as well is the decision point to break that high. So it could fake this range and come down to here, and that's what holds it up. But between these two levels, you know, it could put in that reversal, or it could just rip up like that. So yeah, that's Solana. I'll be looking for this, like I said, to flip and then confirm my bias for this being a bottom. But if it does, I think these are the types of moves that everyone, particularly people like me who are waiting for confirmation before getting in, missed the exact bottom, and then everyone starts jumping in when these kind of first trouble areas and first resistance levels get broken, okay? So yeah, I hope you have learned something from that. Let me know if you've got any questions. Let me know if there's anything you want me to chart. And I'm just going to take a sip of my water, and then I'll look at the chat. Okay, Paul says first timer over here. Thank you, mate. We do this every Monday. I do the videos every Monday morning and then do the live stream every Monday evening. Demo Killer, yo. Hodl Rocket. Sup, bro? Random question. Why do you use fib retracement instead of a simple box to mark those important lows and highs? I've always used a fib retracement on TradingView. I don't actually... I have my own charting software, which I use, and it has all my own tools in it. So I rarely use TradingView. What is using TradingView's functions, and it was just a kind of habit thing, because you can extend. I don't know if you can do that with a box. Let me have a look. It might make my life a lot easier. Oh, you can. Oh, awesome. Thank you. I will do that. I will do that in future. But yeah, it was just kind of a habit thing from years and years ago when I used to use TradingView. And I've had my platform for like 6 years. So yeah, thanks for that. Good evening, Matt. Tyler. Hello, Tyler. Evening, Matt. Morin's here. Hello, mate. Hope you're well. If you want to look into some coins at the end of the stream, could you look at pump and useless? Yeah. Thanks for the ETH analysis. Yeah. It's reacting from the monthly open. I believe it flips and holds. We break above 4K Ethereum. Yeah, yeah. These kind of levels tend to. I think we spoke about this last week as well, didn't we? These types of levels are always. There's always something that kind of adds some sort of confluence to them. You could always find like a supply demand zone at these key levels. It's just the way that people trade. You know, some people have strategies and algorithms developed around those areas. Some do it around the daily, some do it the weekly, monthly, hourly, whatever. But yeah, those are pretty significant levels. Hell yeah, the continuation patterns are a gold line. Watch Matt's educational series about these patterns. Yeah, that's the price action strategy for beginners and intermediates on my channel. And I basically talk about the decision points. And I talk about the reversal and the continuation patterns. They're not my patterns. They're just really basic patterns. But if you apply them to the right areas and you wait for the right confirmations, the strike rate is insane and they really fly. For those who are in Bitcoin or Ethereum trades from near the lows, where would you say you would put a trailing stop loss? We'll see. Let's have a look. And then I'll get to the shit coins. Oh no, is it frozen again? I don't know why it does this. It's been doing this every time I'm on stream. You guys can still hear me, yeah? I don't know why it's done that. It's just going to refresh again. Here we go. All right. Yeah, I don't know why it does it. The freezing. Right. Bitcoin. Okay. Was this Bitcoin? Yeah. If you're on Bitcoin, I'd probably trade. I don't know where your entry would be, but on M30, I would say below this level is probably the safest bet at the moment. But the way I trail my stops is to where's my pen? It's in this one, isn't it? Price trends up, puts in a level. Let's say my entry is down here. Puts in a level here, and then it may test this level or fake these lows, and then puts in a high, and then I would trail my stop there, and then does the same type of thing, tests it, and then higher high. So every higher high, every second higher high, I trail my stop like that. So if let's say your entry is here, I would trail here. And then when this high here is made, I would trail here. And then now that we've put this low in, at this point, sorry, not that point, this one, second high, I would trail my stop below here. But I'm not totally convinced that that's going to hold just yet. So if you're in from quite low, you might as well just move the break even potentially and try and ride it. But yeah, that's how I do it basically. And Ethereum as well. Sorry, I'm trying to think what else you asked. Ethereum, same thing. If you're in from the lows, let's say your entry is here on the break of that high. When this high gets put in, I would put my stop here. And then when this high gets put in, I would put my stop here. And then when this comes down and puts in a new high, I would move my stop here at that point. That's how I would play it. I hope that helps. Does that help? Okay. Danny says, regarding key levels on Ethereum for market structure, you pointed out 3310 being the low to hold for the market structure. Whoa. Where are we? Chat just moved too fast. Oh, you took the message off. That's why. But you said 3310 is the key level for Ethereum's bullish structure to hold. Wouldn't it be 3510? Let's see. On this time frame, I said 3310 is the key level for Ethereum. Wouldn't it be 3510? It must have been on a higher time frame. On the higher time frame, this low. If this low gets broken, then the market structure changes. On this, yeah, on the macro, okay, yeah, macro structure. If you're saying 3510, no, not in my opinion, because it could come down and still range and then come back up. But if it from this point after this bounce and then putting in higher highs, if it then comes and breaks that low, that for me is starting to look like a market structure break. But considering how much this has moved on this time frame, if I'm on an M30 trade like this, yeah, my idea is probably like 3-5-10. But on a higher time frame, yeah, I would say this is the level here that is holding all of this price action up. So if that breaks, then you go to the next level, which is down here. I'll just mark that there, which would then be 2915 for the next market structure break. So yeah, that's how I look at it on the higher time frame. But your first sign of that would be on the lower time frames, right? So yeah, it would be more like this is a interesting level, but this is all getting held up. This is all a reaction. Like again, if you just go to the left, this is all being held up by like down here. So I think it could come all the way down here. I'm not saying it's going to, but if it did come back down here, it could still find strength to push back up. Whereas if it comes down and starts breaking this, I'm not so sure that it holds. Not strictly the low to precede the highest high end. No. If, for example, the move looked like this, you have this level, and then you have a clean break, and then you have like all this scrappy price action here, I would say then you've got this low would be a market structure break, which is kind of what we've got. But the low that preceded the highest high in this instance would be technically this one, because you've got this high, price drops down and then finds the support to come and put in the next high. So again, if you just look at what it's telling you to the left, this is not a low in isolation, it's a reaction to support. And then that, again, if you just mark it to the left, you can see is a reaction to the top of this level. And then it's now come down to the bottom of the level and starting to react. So just following the chain, I would say this is that market structure definition, if you like. Does that make sense? But again, like if you're trading, yeah, clean and slow, yeah. But again, if you're trading on a like M30, for example, you would say, you're intraday trading, you've got a really clean gap here. This could come in like that. And then if it does break, then I would say this is a market structure break. And then you're looking at the next level. This is why, again, you look into like risk reward. If the risk reward is there to take a short at this market structure break, then you can take it. But in this instance, you've then got another key level directly below it. So even though you can see these market structure breaks and that it wants to go lower, there's not necessarily a trade there. It's just that price travels from supply to demand and from demand to supply. And then once it's broken this demand zone, it's going to head for the next demand zone essentially. But there's, like I said, there's not always a trade there. Cool. Tyler is asking, what constitutes as breaking a level and flipping it for you? E.g., do you wait for H4 to flip, or you look at ranges being formed on M5/M15? Just trying to pick your brain, Matt. So I always get my bias from the higher time frames, and that's essentially is what is going to dictate whether you're looking for longs or shorts, right? So the way I would look at it, I'm going to do a video on this soon. It's going to be my next stage in the third video in my series of price action videos. But it's essentially you're using different time frames, right? So let's say you have a swing like this, and you get a top gets put in, and then you've got this level here. So what I would constitute a market break is a break of that level, and normally it could be a close, it could be a wick, and then what I want to see afterwards is a retest of it, another low. I'm not confirming it as a market structure break at this point. You've got another range. Oops, that looks shit. You've got another range. I'm just going to draw it with this. That forms on that level. But this could just be a fake out of that low. And then what you get is a higher high, a higher low, and then a higher high. And then you wouldn't say that the market structure is broken. It's been respected. And the thing is, like with trading, you can find levels that bounce absolutely perfectly to the absolute point. And I used to make strategies based on that. It gives you the best risk reward, but it's such a tough game to play. Because like if, for example, price is at this point and you go, right, well, here's my trade then. I'm going to take this range and it shouldn't break the low. It shouldn't break the market structure. It should respect this level and bounce. But trading isn't perfect and these levels aren't perfect. It just gives you an idea of where to look for strength. And it could come down, break the level, like I said, and then put in a lower high, a lower low. And then what I want to see is it can't put in a higher high, or maybe it does put in a higher high, but then from that point, it then makes a lower low. And then I would consider this level like fucked, basically. And then you could look for short continuations on the break of that level. But it's essentially like a lower low, a lower high, another lower low, and then just a confirmation from the market that it absolutely can't retrace back up. And then normally what you see in these instances is a big candle that comes and breaks into the lower low. And the order flow is really obvious at these points. But that's essentially how I'd consider it. Or, of course, if you... and you normally see these at like exaggerated tops move, but you could just see like a complete nuke through it. And in which case, like it's really hard to get involved in them. But what I would say as well on this is if you've got a level like that, and this is H4, sometimes the levels like look like this, sometimes they just look like that, and they're really quick. But you know, this has basically spent days going sideways on this time frame. And then if you want, you can wait for it to come to the lowest point, and then you drill down. So this is H4. You can drill down to H1 and then look for that reversal pattern on H1, which is only really showing on H4 like this, but you get way more information on the lower time frames. And then you can look for your long at the market structure break levels. So they're really key levels, but if you've got your bias from the uptrend, on a higher time frame, when it comes and breaks the market structure, you're then betting that you're going to have a big downtrend. If you've got another support level just below, like, and you're, even if you're getting as tight as you can, where it's like, okay, well, this is the market structure break. If it then comes back above that level, sorry, I'll make it cleaner. It's broken the market structure of this demand zone, of this support, and now it's putting in a level that says, right, it's going to go lower because we've broken that market structure, we've broken this trend. You would trade it logically as, well, I'm going to put my stop above this level here, because then if it comes back up, it's broken market structure again, right? Because this is the level which should be holding price down. It should be continuing. Essentially, like, when you've got another level at this point, are you really going to risk going against the trend when it's pushing up quite strongly? Are you going to risk the trend, like going against the trend for a 1.5 hour trade, when what makes more sense, in my opinion, is you would wait for this level down here, and then you'd look for a reversal. And then if you missed that, which is even better, this isn't even like, it all depends on the patience. And this is why, you know, the sniper meme exists in trading, sniping levels. If you've got all of this price action, it comes down, it bounces off this, and you've missed it. It could have happened overnight, or you're just wanting to wait for more confirmation. Could break this level here. And the way I would define that market structure break again, in this instance, would be, let me make it a high, a low, higher high, higher low, or it could fake the low, and then a higher high would be my signal that it wants to go higher, and then it could put another higher low, and then another higher high, and that could be my entry. But without this information, I'm not looking to trade these levels like that on first tests. But that's a way you can paint a trade. Wait for the most confirmation, wait for the most information as possible before jumping on a trade. And then usually at these points, when you've got a higher time frame trend and you've got this first level that gets broken where you would expect it to bounce, if it comes lower, pushes back up, and then you find this confirmation on these key levels, then you can find trades like that rip just like that. And it's kind of what I was saying about, was it M30, that level? Like here, right? This type of continuation here. Because if it breaks here, remember, in a downtrend, bounce off support, and then you could technically, at this point, it's really easy to see in hindsight, right? But if it comes down, pushes up, again, you would expect, if you're bearish, to not be able to put higher highs in and to drop, but it doesn't. It pushes up, comes sideways, and then puts in a higher high, puts in the continuation, and again, it changes the market structure. But this is the earliest point, or actually, sorry, this is the earliest point, because it puts in a higher high. That's the first higher high here that gets put in since, well, in this entire move down. Do you see, like, this is technically a fake out, but you've got lower high, lower high, lower high, lower high, lower high, more lower highs, lower high, and then instead of this being a lower high, you get your first higher high. So there's your market structure break there. Okay, and that's at the earliest point. But if we jump down to M15 and see more candles, it's got the exact thing I was just talking about, the exact pattern. Just break it, get rid of all this shit. Well, you've got this high here. You need to bet, basically, if you're short, right, that I mean, every lower high that gets put in, if you're just going, right, it's a lower high, I'm just going to sell it, you get rewarded down this whole trend. At this point, at major support, which is that market structure defining level, remember, we get a higher high, and then we have this pattern here. All right? So you want to see, if you're bearish, you want to see it come up, put in a high, put in a lower high, put in a lower low, maybe another lower high, and then it drops. You want to see that to continue this trend, but it doesn't. Pushes up, higher low, higher high, higher low, higher high, and we're away. Yeah? So we have A, B, C, D. We have A, B, C, D. Okay? Does that make sense? I just kind of got lost in all of that. But I could talk about this for days. That's essentially how I look at market structure breaks. I can see I can get rid of all this shit now. So I'm going to flip through the screen. Thanks, Matt. Honestly, after SC and XO, I love your style of trading. Keep killing it, bro. Peak education. Wait for more vids. Cheers. Thank you. Appreciate that. This is extremely valuable. Thanks for taking the time to explain this in depth, Matt. No worries. I agree. Matt's trading super clean and reactive. Thank you. Yeah, I just trade the price action. I just trade what the chart is telling me. That's all you need to do, really. The thing I've found is if you're trying to catch levels, like first time, like if you're bearish, for example, and you're like, right, this is my level, this is my area I'm going to trade, and you're going to hit it like that, right? You're betting on this entire trend retracing, and I think it's just far better to wait for what the price action tells you. Wait for these sell-offs to get exhausted in an uptrend, and then look for areas to trade them in the direction of the trend. So it is just, if you wait for as much as possible until the point where you feel like you're going to miss it because it's so obvious, like it will slap you in the face how clean and obvious it is. Like, I'll just get rid of this last bit of text. This level here is honestly so textbook. If you're waiting for it, look what the chart is telling you. Again, I'll just make this a big focus. Right? Look what the chart is telling you. So you've got the range high. So you've got the high and the low, the original high and low. And then you have a higher high here. You have a higher low here. But then at this higher high, look what the market is telling you. If you're looking for longs at this point, and you're not really sure if it's going to continue, at this point, you're definitely like, okay, fuck, it looks like it's going to take the lows. But it doesn't take the lows, does it? It bounces off of them. But again, if you're not in a position, if you're just waiting and waiting and waiting, look at the next three candles. You've got a higher high at this point. You're kind of looking at this going, right, this is now the third higher high, and it's retraced this move. If you're watching this candle form and watch it close, you're expecting it to continue to the downside. I mean, look what that's saying. It's saying it pushes up to this next high and then drops, engulfs all of the like previous 5 or 6 candles, but then in the next 4 candles completely rips in line with the trend. You're like, okay, this is super clean and obvious. But it even then comes down, puts in another higher low, and then you've got this big fat boy here that puts in a higher high. It's just the more information you've got, I think the better it is to trade that way. But, you know, I've taken trades in the middle of these, and I've had loads of squeaky bum time where it looks like it's going to take me out, and it doesn't. I actually had that on my trade. I put this up on X as well, right? So all the way at this low, I got in too early, and I got saved by literally like a couple of points. You've got the first trouble area that gets broken. and then you've got the range that gets formed, and then you've got the higher high. Oh, shit. You've got the higher high here, a series of higher lows, another higher high, and I think it was this candle or it was this next candle I entered in on, because if you blocked all of this out, right? If I just take that and shit, I've not done this before. Border, no, background, there we go. Background black. If you're looking at it at this point, okay, it doesn't cover it. It looks super bullish. It's got all of the key ingredients there to push up. So that's where I went long. But, you know, I've taken trades here, like here as well. Was not like you could have taken that. But I got saved literally by something stupid like that, because I thought at this point it's going to go. But then it's at this point, it's definitely going to go. And that's just an asset thing and knowing the behavior of the asset. But yeah, just the more information you have, the better. And if it's a real skill, the hardest part of trading is building that patience. And you'll only get it from being butt fucked enough times by not being patient. And at some point, you just end up going like, okay, I'm just going to wait. One of my strategies is the inverse of that. And again, this is going to be in my next video, is where the levels that you expect, like you've got something really clean and clear like this, you're like, right, this is obviously going to push up. Maybe you're in a downtrend though, and it's like, okay, this is going to push up. It's giving me all the signs. It's giving me like 3 or 4 higher highs. It's putting in 4 or 5 higher lows. Doesn't look like when it's going to go up. This meets the criteria to take this long back up and reverse this trend. But one of my strategies is to wait for this and wait for then the next candle to come and break it all, and then I'd short it in line with the trend. And that only comes from like building the patience and taking losses too many times on the opposite side. So if you can wait for just wait and wait and wait and wait and wait. And the more you wait and the more times you wait for those trades, you'll see you'll see basically like it's like a cheat code. But the more times you see it build up, you'll know when the sweet spot is to enter. And again, like exactly the same thing here. You've got several opportunities where it pushes up, pushes back down, and then it retraces and pushes back up. And in hindsight, again, it's very clear and obvious. But this big fat boy here is like, all right, we're good to go at this point. But in the middle of the range building up, you're umming and ahhing over a lot of stuff. So yeah, SE is here. Hello, mate. Everyone like the video and subscribe. I agree. And also go in the description and trade on what with my ref link, and I'll give you half the commissions that I make on your referral. So Linky also asked for useless and hopeless. No, useless and what was the other one? Pump and useless. All right. Let's look at pump first, shall we? Okay. Remember, this is what exchange is relatively new, so there's not a huge amount of information. Might actually serve us because we're just going off of the most recent price action. So the daily, yeah, has it been around for long? I don't know. It's pump fun, I guess, isn't it? Okay, so unfortunately it doesn't have a huge amount of price action, but this is the bottom of the trend, potentially. It's looking exhausted, right? And what I was saying about higher lows and lower highs and everything, on the downtrend, you've got the first attempt. I mean, technically this is a high high, but it didn't close above that high. So you have your first higher high here. And then if it breaks that higher high, I would look then, you've got like a W reversal pattern. I would say at that point it's your confirmation that things are going to go higher, and then you could look for continuations to go to the upside. On the hourly, yeah, like this is what I'm talking about waiting for the absolute right moment. And again, that also comes with knowing the asset and trading it like multiple, like for a very long time. So this looks like a long, right? This looks like you've got your push up and you have multiple instances where it does that. So this is A here and that's A there, but it's pushed up and it's come back down into the range. So if it doesn't break these lows, it could come down to this point because this is the level that's holding that entire range up. It could come down here and then put in the reversal. But let's say now it respects this, like in that Ethereum level we just talked about, where it put in that big bearish candle and then it ripped to the upside. If it ends up making a high, a big chunky high at this point, I would say that you could go long. Like on the candle like that, I would trade that pattern like so. But at the moment, yeah, it's building the range. So this looks like the instance to go long. It would have been a nice long, and you know, if it does lose, you take no shame in that because it's just one of those things it didn't follow through. But now, you know, again, if this could also be if it comes and breaks down a short, but considering the whole trend looks pretty, this reminds me of the Bitcoin bottom in like 2019, crazy. This whole thing looks exhausted. So the risk reward for taking shorts is probably not there. I would wait for just a bit of sign of life, essentially. Pump is so hated. Just wanted to see what you make of it. Yeah, I mean, I don't really know the fundamentals of these things. I don't follow them just because I don't trust any fundamentals in crypto. I've back in the day used to put money into things that are going to cure cancer and all that, and they're just like shit coins. It's just any excuse. Just look for the price action. Just look for where the money is. Just look for where the flow is and where the volume is, and trade that essentially. So now let's look at useless. Okay. Oops. Oh, I remember. Yeah, this is we talked about this down here, was it down here? Or was it at this point? I can't remember. This is kind of bullish though. So, big low here. And then we have the big retrace point high here. And that is kind of flipping it. So this is all a reaction to this over here, here. So the kind of breakout level, it was there. That's the kind of the end of the chain for me. Right? So you would expect this to continue based on all of this, but it's broken here. Sorry, you would expect it to drop if you're looking at it like this. So it's in a downtrend and now it's retraced up to supply. You would expect that supply zone to drop down, and that would be the goal or the target, sorry, for that move. But again, like everything else is kind of finding support. Oh man, the volume's really low. But on the break of it, you can't really see it that well. Nothing I can do about that. You have the low, you have the higher high. You would expect this to hold. So your range kind of looks like this. And it's building at the moment. I would wait for more price action, wait for the lows to hold, wait for it to come up and try and push up higher, wait for the lows to hold again, and then on higher high, you could go long. But if it doesn't, if that fails and then just rips down, you could probably short that. But again, the question is the risk reward there to the next level? And it probably is in this instance. You could probably get a couple of R out of that. But I would just wait for that to move. It looks like it's reversing. It looks like these sell-offs have been exhausted. I think July has just killed a lot of people mentally. And the issue isn't about staying solvent, it's about staying sane. But again, it goes back to my point of just waiting and waiting and waiting for the right moment. If you can do that, you're going to be quids in. Oh, it's just frozen again. Fucking hell. All right, when it comes back, I've got a good point to show you because it looks very similar to another piece of price action up here. Let me go through the chat while I wait for this. Would I trade chart hype as well? Yeah, I'll chart hype as well once this unfreezes. Funny how we watched useless breakout from that range around 0.12 or something. It eventually ran to 0.4. Yeah, I wish I entered on that. That was a shame because that was a really nice move. XRP. Okay, I'll add that to the list. Hello, SC. Pump is so hated. Yeah. Oh, shit. Okay, cool. Are we back in the building? Yeah, we're back in the building. So this looks similar here, right? So these highs and big smiley face. This is not the level because you can see this is basically bouncing. This is taking out support, which is all this chain. This is all, actually, that's probably the end of the chain here, to be fair. But this is kind of reacted from there. This now looks exhausted, whereas it didn't look exhausted here. But if you were at this point, just get rid of some of those faces. At this point, you had your range that formed. That's where the risk reward is for the short, in my opinion. You kind of wanted to see a bit more price action, but if you were watching it and you know the asset, it's kind of ripped through it. So now at this point, it could do the same, or it could put in the reversal, basically. But you can see the similarities in the price action. It's always best to wait for those key levels and wait for price to go sideways at those key levels, in my opinion. Building repeatable entries / context criteria and those trending consolidations you were talking about. Is it just a matter of time and experience to create your own? You can take anything, right? Here is a very basic pattern. You can call it a bull flag, you can call it a demand zone, you could call it an order block, you could call it a range breakout, you could call it a million other things that Furus have been calling these things online. But at the end of the day, all it is price consolidating sideways and then a breakout in line with the trend. You can watch for these patterns. They appear all over the place. They appear in multiple different ways. You know, this is a pattern here, this is a pattern here, this is a pattern here. But you can see they all look different, but they're essentially giving you the same information. Prices drop down, based, and then drop down, and then based, and then drop down, and then based. And then if you notice these, obviously the inverse, if you notice these and you notice that there's edge in them, you can develop a strategy based on that. And that will come from, in my opinion, thousands of reps. But you can get an idea after like 20 reps if it's going to work. How do you trade it? You could trade it on the breakout, which is what I like to do. You could wait for the retrace to the level and then trade it. And, you know, or you could wait for it to test the level again and put another breakout candle in. It all depends what you're noticing the most. But it just takes a lot of reps, basically. But that's just one pattern. You could just wait. You know, you could just literally wait for trends. You could wait for, what do you call them? That's not drawing that properly. Like pennants as well. Is that a pennant or is that a wedge? similar type of thing. Prices is just going sideways, and then you can get the breakout, or you could get the reverse of that. You could take literally any basic pattern when it comes to price action trading and just see how it reacts, how it moves, and what ways you're most comfortable of trading them. Basically, it all depends on your personality. Multiple different time frames it works on. You could look for this on H4, and then on like M15 at this point, you know, you've got the trend that's up, but then on M15, you could have another little pattern that breaks out there. So, you know, you can apply multiple time frames, you can apply multiple patterns, but the price action will tell you, okay? Okay. Narrative and pump, yeah, it's so hated as a liquidity strata. That's what it needs to be, a hated rally. Yeah, I know, yeah. I understand what's going on with pump fun. I can understand why people hate it, but at the end of the day, we're traders, and if there's money moving that market and it's putting in something where you can build an edge from it, you might as well trade it, right? And that's why your reviews are so refreshing. Thank you. Could we have a look at Troll? Yep. Hold on, I've got XRP to look at as well. That's on the list. Let me do that next. Let's see, make me a mod. How do I do that? Add as a moderator. There we go. All right, SC is a mod, so you better be on your best behavior, guys. Okay, XRP. 1 second. Mrs. is calling me for dinner. Let's just do this. Give it another 10 minutes tops, and then I'm going to shoot. All right, so big old range, and this is kind of what I talk about on basically this whole stream, but on lower time frames. This is a higher time frame, huge range that formed, and then you can see high, all these lows that get respected, and then we get another high, and this is just basically now the market's saying to us it wants to go higher. And then just as I said about that point where at the extremes of levels, you can have this on the higher time frame, but somewhere down here where price is obviously bouncing from, you're going to have some price action that looks something like that on a lower time frame, and that's tradable, and you get your trend bias from the higher time frames and from the information down here that this range low has been respected multiple times. So if we drop down to, let's do H4, and then you can see, like I said, like you've got the range here. And again, as I've been saying on this stream, where you've got these clusters at highs and lows, like important highs and lows, you're going to have really nice tradable levels. So it's come down into it, bouncing off it at the moment, and then we've got first trouble area here, which is the last high before the test of the lows. So this is essentially a supply zone. Again, I've marked just the extreme of it, and we can see again prices come up, and it's gone sideways on a lower time frame and broken out to the upside. So it's given signals it wants to go higher. And then just to revisit the conversation we had earlier, this would be, if it comes down here and starts putting some lower lows in, that's your market structure break. H1, here you go, really clean pattern. I'll probably be even clean on M30. Again, just like I was saying, you wait for the trend. You wait for the trend to go up, you wait for it to retrace, and then once that trend high is tested, either broken out or tested, you can confirm it as a range, which happens at this point sort of. And you can kind of eyeball these as well, and what looks the cleanest. Like that looks clean to me, but you could also mark it like that. So what we have is, a very clean and break to the upside, comes down, tests the range, and then puts in a high high. Although it's wicked it, still counts, but you can see it's coming tumbling back down. Now this could do a couple of things. It could come back down into range, a bit more sideways, and then on the next breakout, look to see a big candle, and then you can go long. Or it could end up going sideways and forming another little range. I trade GBP USD, and it does this all the time. And you could, same principle, look at that range as somewhere to go long, essentially. But again, it all just comes down to the price action and waiting for the best time to execute. But I wouldn't long this just yet, looking at the way this happened. And then again, it also depends on the behavior of the asset. In this instance, like if you've drawn this as a big range, look how it moves. It comes up, comes down, comes up, and then it spends ages down the bottom of the range and then moves to the upside. If we drop back down to H1, it could do a very similar thing where it's pushed up, drops down, pushes back up, and then spends ages down the bottom of the range and then moves up like that. So again, the asset changes, the patterns, the order flow changes depending on the volume, and these assets all behave very, very differently. So if you're just watching one thing, to go back to Danny's question, if you're just watching one thing, multiple reps and recording those reps, you'll understand how things move, and you build that sixth sense of how it moves. So yeah, I hope that helps. I'm trying to keep this short now because I want to go out for my dinner. It's been an hour and a half, bloody hell. All right, I won't take any more coin requests. If we've been asked troll and jup, and then that'll be it. If what has them, I'm not sure. Yeah, it's not on. Troll's not on there, sorry. Jup is. Very low volume. This is Jupiter, right, I guess? All right. So this was last year, I remember. This was all the mania for it, and then everyone lost interest earlier this year. And then from this, you have this really big low here. And then you've got, this is the first trouble area. This is the supply zone. This is where the decision was made to come and break that low. So that's a key level, but it gets respected. And again, this is because the volume is low. This is why you have to be careful when you trade meme coins and shit coins and stuff. Pushes up into that supply zone, drops, and then pushes back up, but then comes down all the way to the deepest level. And same principle, right? This is the deepest level here. Shit. Because everything is just a reaction to that level. So price comes down, puts in that high, and instead of respecting it and dropping, it pushes higher. So this is where the origin took place to come and break that and break the market structure. Pushes up. This low is just a reaction to this high, which is essentially just this entire level. So even when it comes up, like I was saying before, it all the way down to the deepest retrace level, and then the same way here, it's pushed up, made it a little range. And if we look down again at this range on H4, actually let's mark it on the daily so we don't lose it, but it is here. Same type of thing. It breaks the market structure because this is trending down, and then it makes a higher high. It finally breaks something in the trend, right? instead of continuing the trend, instead of dropping down, it ranges sideways and breaks out, and then you've probably got like a 3-4 hour trade on that on the lower time frames. But again, like I was saying, these things all look different depending on the volume, depending on the behavior of the asset. So this comes down, and then this one is way less clean. This is the level that's holding it all up. That's the decision point to make the high, to be fair. So that's quite a clean level, actually. But this is basically where the buying took place to come and break the high and make the higher high. So you can see in this range, it drops down below it, tries to push up, puts in a series of higher lows and respects this level here. And then it just gives you a sign. It breaks above on this candle here. You could say that's your entry with a stop below the range, and then you can ride that up. Now it's coming back down to test it after like a round trip. I wouldn't be as hyped, if you like, about this pushing back up, but I would just wait to see more price action first. From a supply and demand perspective, once levels have been tested, they end up getting weaker. So yeah, a second time back is normally not as great, but it could come now. Like if it's still bullish, if we're still in a bullish market, it could come down to this extreme, and then you could start seeing some sort of reversal pattern down there. Okay. Right. So troll is parabolic. Why would you want to chart that? Go back earlier in the video, and I was talking about trading down. Like what was it? It was Solana, wasn't it? When things end up going parabolic or like a really big trend, they can indeed retrace to the deepest retrace level. So look for them. SC got you into BERT. So they don't have this on BERT on here, unfortunately. I've messaged them and said get BERT on here so I can trade it as well, but it's not on there at the moment. Sorry. Everyone be on your best behavior. Ruthless mod is at the helm. It's been almost 2 hours. Felt like 30 minutes. Massive stream. Thanks for sharing, all, Matt. Cheers, man. Thanks for coming. Thank you for everyone for being here. Thank you for listening to my dulcet tones for a very long time. I hope you've learned something. I hope you found it valuable. If you have, considered joining What Exchange. I've got the ref link in the description below. It's non-KYC. It is there's a big airdrop at the beginning of 2026. There's commission rebates as well, which is the big thing. So if you sign up, I'll get paid on the volume that you create, but I'll give you half of that volume straight into your trading account, and you can withdraw it, you can trade with it, you can stack it, and yeah, that's all for you basically, and that's forever. It's not a gimmick, it's not a one-time thing, it is forever. So yeah, ref links in the description below. Anything else? Get them to list BERT. All right, nice one, man. Yeah, I will speak to them. I've actually already messaged them about it. I did that before the stream. Demakilla, thank you, sir. Have a nice dinner. Thank you. I've got beef mince and eggs, so it's going to be enjoyable. All right, guys, take care. Hope you have a good trading week ahead. We do this every Monday. Don't forget, got a video every Monday morning and then the live stream every Monday evening. Take care. Bye-bye.